It has been another roller coaster day on the markets. To help us make some sense of it all, let's go to Darren Dansereau. He's Chief Executive Officer at QV Investors. Thanks very much for your time today.
Thanks for having me.
I think we saw a swing of something like 300 points today, just up and down. What do you see as the biggest news playing out today?
Well, I think it's a combination of what's happened today and what's been happening over the last week or so. I think just with the number of announcements in terms of tariffs, tariffs coming in, tariffs coming off, I think that's been the biggest thing. So yesterday, getting that announcement that tariffs would be taken off for all those that are covered under the USMCA, I think that was obviously a big component. Now, what's really happening, though, is you have individuals looking at their portfolios and trying to figure out, what do I do now? Then today we've had another announcement on supply management. So even though it's not much in terms of its effect on public companies, I think it just gets people thinking.
Okay, so you mentioned the ups, the downs, the volatility. Investors are likely either panicking or trying to be cautious. I mean, do you think they're going to get used to the chaos and in some way and things will settle down, or do you think we're going to see that roller coaster for some time?
I think the roller coaster will continue for a little bit longer. And the reason is because people are still trying to pre-position or, I guess, post-position their portfolios, trying to make sense of what do these tariffs, what do these announcements mean to their individual securities. So I think people are pre-positioning for what may come. And I think we've seen a couple opportunities where people have seen tariffs come in and then see what's happened to their portfolio holdings and then determine maybe what move they want to take.
Okay, so Ottawa, as you may have heard, is announcing a $5 billion initiative now to try and help people who export, Canadians who export typically maybe to the U.S. to find new markets, or at least some markets to take some of their goods if they want to divert. Is this enough, you think, to provide a bit of stability to the exporters who are maybe in a hold position right now?
I think it does provide some opportunity for them, so they know there is going to be some support, which I think is very positive. Maybe it'll allow them to make certain decisions, knowing there is something out there, a program by the government to back them. I think the biggest concern, though, is what is going to get tariffed at what percentage rate and how will it impact those exporters' businesses. So longer term, they're going to want to look for those export markets. But I think right now they're trying to determine what happens in the short term. How do I export next week or next month? And then longer term, these programs, I think, will impact and give them some opportunity to maybe explore what those other markets are outside of North America.
Yeah, definitely not going to be take away any of the pain right away. Let's talk about a couple of companies that you like in this volatile time, because people are looking for where they can stash their money and maybe be a bit safer. CCL is one of them. Tell me about CCL.
So CCL Industries is actually the largest label producer in the world. It has 150 manufacturing facilities around the world. And why that's an advantage, in our opinion, is typically they put their factories next to their customers. So if you were only exporting from Canada, that's where they're based, then there would be an impact on tariffs. But if you have your facility in that country where they're actually producing the items and putting the labels on, the impact of tariffs is small. So that's a strong positive. This is a company that has grown substantially over the years, and we're seeing actually their margins slowly improving over time. So tariffs will impact many businesses, but we think this is one of the ones that has pricing power and has limited exposure, something that's, we think, quite attractive.
Okay, you also like Intact Financial. Tell me about why you have chosen Intact.
So Intact is one of those companies that's not going to be impacted like the banks. So Intact, being a property and casualty insurer, it's pricing its products once a year, and it has over 20% market share in Canada. So it has a very strong market position, and tariffs will not, it may impact certain parts of their business, maybe repair costs and that sort of thing for vehicles as an example, but it is a one-year period. So next year, if there is issues where costs are going up, they can reprice their premiums, and that will allow them to get the return that they're looking for. So I think looking at the longer term, that's what we do at QV, is looking at the longer term opportunities in some of these companies and using the short term volatility that we're seeing to go into these businesses that we think are strong compounders.
Okay, Darren, I do have to leave the conversation there. I'm out of time with you, sir, but thank you for your time.
Thanks very much.